is at 10-month high. It's touching over it's hovering between $92 to $93 a barrel at the moment. And this is concerning. This is concerning because it's not just, rising inflation, it's not just offsetting that, it's also concerning on many counts. India continues to be a net exporter or importer rather of crude, which means it's going to jumble up a lot of our economics here in India. I mean, there is still time for that, 4 to 5 months in advance. And in next 4 to 5 months, perhaps that's going to play up on the Indian economy as well. But crude prices there continue to be a cause of concern.
Yes, so they're inching towards the 100 mark, but not there as yet. It's the Brent benchmark has risen 47% points to 92, a little over 92. The WTI rallied 55% to 89 levels. But all in all, it is a 2% increase. OPEC has marked down their global supply, global demand for this year by 1 lakh barrels to around 292 lakh barrels for this year. For next year, they've kept it at 30 lakh barrels. Which is also down. So yeah, it is inching towards, and what everybody is worried about is the $100 mark, which
it will be a big dampener.
It'll be a big dampener for the markets.
We had Amit Gupta yesterday, who was of the opinion that sooner or later we can see Brent crude going past the $100 mark. It will be a very big monitorable for the market and the participants to keep a track of, because as we know, for the Indian markets, India being a net importer, it has a big implications. Also, crude prices have a lot of implications when it comes to inflation, interest rate, also the currency. Rupee, as we know, is near its record low levels. And this is despite the fact that Indian markets have been, on an up and outperforming, but rupee has been under pressure, and this is largely because of the crude prices, which have scaled to a multi-year highs, about $92 a barrel currently. May go up to $100 a barrel.
We don't know it just as yet. But it's very surprising if you look at it, the dichotomy of it. Although the demand is lower, the prices continue to inch up. I mean, how do you really explain it?
So the biggest problem why this was happening was because OPEC had been cutting its supply. Now what we are seeing that the push is coming from the demand side. China's economy is again picking up. If you look at the reserves that the US has, they are at near their all-time lows. So demand is once again picking up. And if you see all the macroeconomic indicators, Shweta, we have seen green shoots of recovery across the board in global, the jobless data claims, the PMI numbers, everything is picking up. So the demand is coming back up, which could maintain pressure on crude price, at least in the very near term.
All right, there could be pressure on crude prices, and as a result of which, I mean, I think people who are watching out there want to know what's going to be the impact on their pockets. I think for Indian consumers, and going back to what we were discussing initially, the impact perhaps will come in the next 4 to 5 months, because let's not forget that there is an advanced booking that Indian oil companies, OEMs or OMCs rather, I beg your pardon, continue to have for next 4 to 5 months, post which perhaps the higher prices will start reflecting, if at all, in the prices of oil, petrol, diesel in India. But even if that happens, the larger consensus is that the government will absorb some of it, because we are in an election year.
And they have been doing that. If you see, the prices of petrol and diesel have been rather stable over the last 6 months. So the pockets of India's middle class, the pockets of Indians at large has not been feeling that pinch just yet, but maybe going forward at some point in time, government may look to transfer that the prices going up to the middle class, and it will reflect in the prices of the fuel.
All right, it will reflect in the price of fuel, and we'll see what the impact will be. Suyash, thanks very much for taking time out. Thank you for joining with your inputs on that story.
Thank you, Shweta.